Good afternoon. Welcome to Pyramid Advisory YouTube channel. Today we are going to talk about indexation. What is indexation? I'll try to explain it in as simple as possible. Let's take then we have to compare. You can understand better once you compare that to the fixed deposit and a debt fund returns. Okay, indexation is generally used in real estate and gold related investments, and also in debt funds. So let's say you have a deposit of 1 lakh. This is an example. 10%, it's not available now, but generally for ease of understanding, I've taken 10% return. After 3 years, the value is 1,33,100. That means your next net gain is 33,100. That will be taxed at, let's say you're at the highest tax bracket, it will be taxed at 30%, which means you will pay a tax of 9,930 on that. Okay. Now let's take a debt fund. In debt fund, you have the same 10%. Let's say 3 years. Same value. Here, in that gain of 33,000, you adjust is 19,101. That's the inflation cost of inflation for 3 years, and the net is this minus this. So your net return is only 13,998 because of indexation benefit. With indexation in debt funds, you pay 20% tax. That means on this amount you pay 20% tax, which is 2,799. That means in bank FD you are paying 9,930 for a 1 lakh deposit, similar term, similar interest rate. In debt fund you pay 2,799. Your net gain is 7,130. This is because of indexation benefit. So what is indexation? In short, let's say we have let's say we buy a pen for 100 rupees last year. The same pen costs 106 rupees today. That means your 100 rupees equivalent purchasing power of your 100 rupees last year is 106 rupees today. That 6 rupees is called inflation. So that is called inflation adjusted return. Like for example, let's say after 3 years, after 3 years inflation is at 6%. Okay, it is 1,19,000, which means your 1 lakh 3 years back is as a purchasing power, which is equal to now 1,19,000. So what you can purchase at 1 lakh 3 years back, you will have to spend 1,19,000. So that is called inflation. That 6% per annum is called inflation, and the cost. This is called inflation adjusted amount. So the net is 1 lakh is now it is if you add this 19,000 is the extra amount you need to add. That is the inflation for that 1 lakh for the last 3 years. That is 1 lakh at 6% inflation, 1,19,000. That is equal to the 1 lakh of 3 years back. The purchasing power of 1 lakh, what you purchase with 1 lakh 3 years back, you will purchase with 1,19,000. So this 19,000 is adjusted in the return in debt funds, and similarly in real estate and gold. And this 20% indexation benefit is given, and you pay tax of 2,799. So that is called indexation. With indexation, you get a benefit of 7,130. So basically, indexation means inflation adjusted amount. Thank you.